In August 2016, the CFPB issued its final rule amending mortgage servicing rules under Regulation X and Regulation Z. The rule came in at a little over 900 pages. In case you haven't had time to pore over that just yet, we've asked Mike Stottlemyer if he could break down what banks and credit unions should know about the rule in 5 minutes or less. Can it be done, Mike?
It certainly can, Jonathan. Mortgage servicing rules underwent some big changes in 2014. Now that the CFPB has had a chance to see these rules in action for a while, it has made some updates that it hopes will make the rules more effective. Though the rule clocks in at 900 pages, there are really 9 key revisions that you want to be aware of. Let's take a quick look at each one. First, the definition of a small servicer is modified under the new rule. It defines a small servicer as one that services 5,000 or fewer mortgage loans for which the servicer is the creditor or designated creditor. Second is prompt payment crediting. Periodic payments applied to temporary loss mitigation programs must continue to be credited according to the loan contract and could, if appropriate, be credited as a partial payment, while those applied to permanent loan modification must be credited under the terms of the permanent loan agreement. Third, prior to the rule, servicers could only force-place insurance when a borrower had expiring or expired hazard insurance. The new rule, however, accounts for situations when the borrower has insufficient hazard insurance, not just when it's expiring or expired. Fourth, the rule changes the requirements for dealing with requests for information. Servicers are required to provide certain information depending on whether or not the owner of the loan is Fannie Mae or Freddie Mac, and whether or not information about the name and number of the trust pool is expressly requested. Fifth, delinquency. Delinquency is defined under the new rule to mean a period of time during which a borrower and a borrower's mortgage loan obligation are delinquent. A borrower is delinquent beginning on the date a periodic payment becomes due and remains unpaid. Sixth, under the new rule, a servicer must establish or make good faith efforts to establish live contacts as long as the borrowers remain delinquent. They must also provide multiple early intervention notices in certain circumstances, and only one early intervention notice is required within a 180-day period. However, if any of the borrowers on the loan is bankrupt or the borrower has invoked the FDCPA cease communication protection with respect to that loan, early intervention live contact is not required. Seventh, the new rule requires servicers to send modified periodic statements to consumers who have filed for bankruptcy, and it includes sample forms to ensure compliance. Eighth, loss mitigation requirements were changed fairly extensively under the new rule. Changes to how often servicers must meet loss mitigation requirements, when a borrower must complete paperwork, and when a servicer must provide written notices are all highlighted. It also modifies how servicers can go about getting third-party information and other information that is not under the borrower's control. On top of that, it clarifies short-term repayment plan requirements when a servicer can or cannot stop attempting to collect documents and information, and the timeline for transferee servicer. Ninth and last, the new rule modifies the definition of a successor in interest. A person is a successor in interest if the borrower transfers an ownership interest in a property to the person by means of a type of transfer, such as death of the borrower or the borrower becomes divorced or legally separated. Of course, there are many smaller changes included on those 900 pages, but these 9 are the highlights. It's also good to keep in mind that the rule changes begin going into effect 1 year after publication in the Federal Register, so there will be more time to digest these changes as the implementation date grows near.
Nicely done, Mike, and well under the 5-minute limit. For a link to the final rule or to contact Mike, please visit riskinbox.com/resources. I'm Jonathan Ferguson for RiskWatch. Thanks for watching.